Hello everyone, welcome to today's live trading session where we're looking to trade the US Open. My name's Tim and I'm one of the traders here at the live trade room. So for those of you that perhaps just before we begin that are interested in genuinely learning how to trade these financial markets, but with a high degree of knowledge and understanding about the decisions that you make and really what's required to be consistently profitable over the medium and longer term, then we can certainly help you. We trade markets with a high degree of consistency on our trading decisions, discipline with our capital, and we may or may not be patient depending on the market conditions. All of these things are all very important tools to develop when trading markets, but to make decisions that are informed, that are supported by fundamentals, where we can look to take on board the sentiment behind these markets as well, and we'll take each individual trade through our charts, and you'll see that in just a moment. So we technically get in and out of trades, but we want to make sure we've done our due diligence with each trade that we get into. So what you'll see over the course of the next hour or so is the whole process involved in trading markets, how to prepare, what we'll be looking to take note of, whether it's fundamental news events, and we'll be looking to trade some of the largest markets in the world, from your foreign exchange markets to commodities and also the global indices as well. So we do have this multi-asset class overview of these markets. We want to be able to see and identify market correlations, and that's really a case of making sure that we've got our ducks in a row when we're about to engage with these markets. So that's what you can expect. So let's start then with our risk warning, and let's see if we can make some cash during this session. So please take a brief moment to familiarize yourself with our risk warning currently up on screen. And the first thing we do really when we get to our trading desks, we just want to make sure that we're mindful of some of the major news events that are likely to impact perhaps some of our trading decision making. And for that, we can get up FOREX Factory. And as you can see, now we're talking about it's Wednesday the 10th. Of course it is already. So what we have to deal with this afternoon is inflation indicators. So we've got our CPI monthly figures due out. So we're talking about consumer price index, and we're talking about how that is likely to impact the US dollar. Firstly, I guess, from a more immediate perspective, but broadly speaking, how inflation is likely to uptick, and we can see indicators like CPI figures. We can see how that's impacting real on the ground inflation. So it is a bit of a starting point. We wouldn't ordinarily be expecting significant deviations off these numbers, but we will be interested to see whether we're expecting on the CPI monthly figure, we're expecting a 0.4% growth in CPI, 0.2% as far as core CPI is concerned, and we're just waiting to see if we get an uptick in that. That would have certain consequences for your equity markets, and as a result, then some of the correlated markets like the US dollar is very likely to react accordingly. So we've got a fairly important news event coming up at 1:30. So we can prepare for these markets in the build up to that news event. In addition, there is some additional news events which we should probably take note of. And okay, we've got the BOC, so anyone trading the Canadian dollar, just be mindful of that event at 3 p.m. But there's two very important events. One's for the crude oil markets, and we're watching crude oil very, very closely this morning. And we may very well be close to getting into a bit of a crude oil buy trade. But we'll see how this plays out. And another news event which the markets are looking very closely at is the 10-year bond auction. It created some significant turmoil over a week ago as we saw bond yields increase. The impact that that's likely to have on inflation. With prices going up, we've got this stimulus package as well in the US. So we've got this potential inflation built in. It's the reflation trade. So we can expect stronger growth. And then by default, will we see the central banks looking to increase interest rates? And therefore, that then has a significant knock-on effect. So we'll see the demand for these events, and I can see that the crude oil, I'm just looking at it off screen, is beginning to make its move. So we'll come on to that in just a moment. So the 10-year bond auction, if you see some volatility around 6 p.m. this evening, and the crude oil inventories number, we'll take that into account with our decision making. So let's get up our trading platform, because this bit of price action here in the in the crude oil, we'll have a look at these other markets in just a moment. Not a huge amount is happening, but something quite significant is happening here with the crude oil markets, and we potentially have a decent buy trade setting up for ourselves. So what, very quickly, this market, we've seen a really significant move to the upside above the 63.76, and then you get your normal pullback trade, and then we're looking for previous levels of resistance, which now becomes level of support. So it just gives us an opportunity to look for a buy trade to the upside. So that's the overall sort of analysis, really. So now we're looking for a buying opportunity. We'll see if we've got that. So we can go into the smaller time frames. We can just take note of swing lows down here at the 63.11. So we've created a very significant low, and we'll take a look at this little handle in here. So what we would like to be is looking for buying opportunities above that line that I've just drawn, which is just sitting in here, the 62.32, and we're now just marginally above that, and we've now just closed above that level on the 15-minute time frame. So it is a primed opportunity. We want to see if we just get a bit more uptick to the upside in this market, and we might look to get into that trade very, very shortly. So this is a trade that we've been looking at all morning. We'll see, and really it's a pullback trade to previous support, and now we're getting this structural failure trade back to the upside. So I hope this trade makes sense for you guys. We've got these highs just sitting in here, and now we are breaking above that level. So now we're just focusing on what's going on here. We expect prices to continue to the upside. From a stop loss perspective, we've got two technical options really. We've got, and it might be worth looking at the hourly. Yeah, it's really the 63.11. That's the 63.67. So even on the 5-minute chart, we've had a little explosive move to the upside, and now we've got a bit of sort of selling coming in. So we just want to see if that turns green, and if so, we might get a nice buy opportunity off in crude oil. Like I said, we do have these crude oil inventories number today, so we might actually get a decent move prior to that event. And if we can book in profit up at these higher levels, then it very well may be worth getting into this trade. The 63.67 is probably a little bit too tight, and the only other really option is the momentum low, the 63.11. So it'd have to work quite hard to take us out. So we're talking about, in terms of a stop loss, we're talking about $1.20, aren't we? Really, $1.25, something like that. Let's say $1.30. So 130 pips would be our stop loss, and we could really expect to see a decent return, we could look for these prices to be pushing up close to the $68 level. So we're currently at 64. So we're talking about kind of a 3-to-1 profitable risk reward, something along those lines, even with an extended stop loss, just to take into account this little bit of volatility in here. So as always, and it's something that traders should really get into the rhythm of identifying the breakout, which is what we've got. So number one is price closing above the significant levels. Number two, so number one really is a close above resistance or support, whatever the case may be. So that's a close above resistance or support. So this is our resistance levels. Prices just keep reversing at these sort of in and around these levels. So clearly defined resistance at these levels. So prices break above that level. We're looking for a close above. So objective number one accounted for. We like this market to the upside now. Unfortunately, like number two for us is follow through. I'll do the full spelling. So we can safely see, and this is on a, well, okay, this is on a 5-minute chart, but on a 5-minute chart we've actually got the close above it. So first part of this decision really to get into this trade is a close above. So we've got that. The second part is not quite what we would expect. You know, we've seen a follow through. Right now the answer is no. So really what we're waiting for, and we might enter into this little sort of question mark phase, and then we might enter into that plus phase, and at that point that's your trigger. So as long as we're above the 64.32, we'd expect continuation. So at the moment it's kind of at this no phase. You know, if we start pushing up to these highs, then it'll start shifting to that, and if we break above, then we'll be we'll have 2 green lights to get into the US oil trade. And what we're avoiding is that false breakout trade, that where prices just roll to the upside and then they just roll back over. So if you can have a process, a lot of traders will get really anxious about getting into this trade in and around that price, whereas for us, what we want to, like, we don't mind if it's 10, 15, 20 pips above this entry level, as long as it meets the criteria for the entry. Now we want to try and get it as tight as we can, but it does need to comply and to sort of, we need to be able to tick that box when we trade. So for us, this opportunity, we've got an entry in here and we've got a stop loss just down at that low. So and we make sure we predetermine exactly how much capital that is. So we always manage risk effectively when we trade. So from an exposure perspective, we'll do the calculations now. We'll be getting in sort of around this sort of 64.35 level, something like that. What I'll do is I'll get up the one-click trading just so you can see the actual price there, and we can see that the low is the 63.11. So we'll just do a few pips below that. So the 63.09 could be our stop loss. So we put that in here. 63.09 is our stop loss, and our entry is something along the lines of 64, let's say 36. So that's our potential entry. That's our potential stop line, stop loss. It's a technical entry to the upside, and it's not just over, you know, these little levels just in here. It extends a little bit further. So if I just zoom out, you can see it's an important level, really, across, you know, prolonged time frames. And that's what we're looking to trade. And we want to see these support and resistance levels. We want to see them play out on multiple occasions. You know, we don't have to be too precise, but broadly speaking, you want to be looking for buying trades above it. You want to be looking for selling trades below these levels. And if you get this situation which we're looking at now, you'd want to change your analysis to look for potentially some buying opportunities, and that's really what we're looking to do. So those are our levels. What I'm going to do is I'm just going to I'll just leave some of this information. No, I won't. I'll revert back to what I was saying earlier. So that just confirms that we are looking at a strong level of support and resistance. It's not a random sort of line on a chart, or, you know, it does make sense across. And this is what technical traders do. They look for technical levels. So we can't just get into this trade just yet, but we could be close to getting into it pretty soon. So this is our entry. And this is our stop loss. So we're ready to pull the trigger. We're just waiting patiently for the opportunity. And we might find a bit of a bid now beginning to creep in. And we're still looking at this on a 5-minute time frame as well. We're looking at it on bigger time frames, slightly off screen, but we can get all the information we really need from this 5-minute chart. Finbar, good afternoon. On the 15-minute, just check there is resistance with a 50 EMA. Would that hold it back? You see. Yeah, we'll have a look at the 50 EMA, but not on the 15-minute time frame. We'll look at it. You know, it's really important on your daily time frames. It's what traders look for, and it's what the majority of your traders and investors that look at slightly bigger time frames. It's kind of it's the levels that they are very interested in, and you can see that the 50 period. Moving average is way down here at the $56 level, so we're way off that in terms of support. So that's the big one. That's the, you know, we're way above. We're actually in a period of kind of overbought market conditions, really. Maybe that's just ducked a little bit lower over the last couple of days, but we're probably in overbought territory. And we're looking for opportunities to buy just purely off support and resistance. So we don't want to overcomplicate trading. So you got the 50 period moving average here, actually, on the 15-minute time frame. Yeah, and it's not an EMA. An EMA would be slightly closer to price, but we've just got a simple moving average. What I might do is I might just change this to an EMA, just see what the real difference is. So it only nudges a little bit higher, and this is really supportive of a buy trade. So there's no resistance, it's actually support. It's below the price, so it's enabling, or it's allowing prices to actually push to the upside. on the 15 period EMA, but we prefer the simple period moving average, but it's far more important on the daily time frame, and less important on your smaller time frames. So does that make sense? I hope it does. So you can see it's just rolling back over to the downside on the 15-minute time frame. So that's giving you a little bit of context for that trade. Yeah, good. So you know, these moving averages and whatever indicator you want, if they reinforce your bias, then they can be quite useful. If they confuse you even more, then perhaps strip them back. You know, you can trade just pure sort of price action really, and determining what price is doing. That's pretty much how we trade markets, and we just use certain indicators on occasion to just reinforce the bias, perhaps give us a little bit more confidence in the trade. Okay. Okie dokie. So it looks like we might be getting a little bit of an uptick now in crude oil. Like yesterday was quite a good example. We were looking at what market was it? Yeah, sorry, we were looking at a sell trade, and this is why we wait for this confirmation, because yesterday we were looking very, very carefully for this market to, yeah, it was to close below this 1882 level. And as you can see, we kept, you know, bouncing off this level on multiple occasions. So, I mean, in the Asian session, it then rolled over, you know, to the downside. So our bias is still to the downside. But as the European markets opened, the euro found a little bit of strength. So we're broadly in slightly bearish downward sort of momentum and direction in these trades. So what we'd want is a structural failure back to the downside. But the point I'm making is we got to this situation maybe 5 or 6 times yesterday afternoon, and the trade failed to perform. So we failed to, and I'm just looking at, it looks like the oil trade is beginning to make a move. So I'll just take this off the screen. So we don't want to obviously get into that trade. Our stop loss would have been above the high, actually, by the way, but we can step back. We don't have to be too anxious to be getting into some of these trades. Right, so we're getting that move now in the oil trade. So let's have a quick look at that. We're getting quite close to that. Potential buying opportunity beginning to creep in. You can have a look at it on the 15-minute, so you can see that we're hopefully going to get a little bit of a push to the upside. We're going to take this trade in a 5-minute chart, so we just want to see now conditions that are favorable on a 5-minute chart to the upside. Okay, so now we're getting that little move. And now we can look to get into this trade. So very important when you're trading commodities to know exactly what volume, what trade size you need to be trading. Stop loss, we're going to get 63.09 is our stop loss for this trade. Let's just get that close. There's the new open. So a stop loss 63.09. Now exactly your volume that you happen to be trading, take into account whether there's a commission to be paid or whether there's a spread, and take that cost of trading into account when you trade. Obviously, if you're running a business, any expense should be considered. Same with trading. Okay, it's slightly messing around a little bit, isn't it? So we're ready to pull the trigger. We just want to see if we get some a move to the upside with volatility, and then see some continuation. So we keep getting the I suppose the close above the important levels, followed by a lack of follow through. So we're very close to getting to this trade, and then we'll have a look at some of the other dollar trading opportunities, which okay, so just a bit of a lack of sort of volatility, really. It's just a bit slow in moving. Now we're 20 minutes away from the open. We might see an influx of capital coming into crude oil, with the expectation for prices to start pushing higher. So we don't really need to force the issue just yet, but if it does tick higher, then we'll gladly get into it. And hopefully, you know, some US capital, North American capital will come in and continue to push higher. Right, now we're getting that uptick. So okay, so We just wanted to just tick a little bit higher. We'd be a bit more comfortable getting into this trade. It's failing to do so. So I'm sure we'll get that opportunity now in just a couple of seconds once we see what's going on. Okay, and this market closes now in just a few seconds. We get a little pullback on the close. Okay, so okay, let's get into that trade. So there is an entry in here at the 64.47 with a stop loss just below that. Well, it's actually at the 63.09 level. So the Island Minister Lewis. So we'll have our squawk on in the background, so we get any sort of further updates. You know, a little bit higher than probably the 63.40 level that we were looking to get into, but the 64.37. But at least we've got momentum with follow through now to the upside, so we're a little bit more comfortable with this trade. So I'll just so 64.46 to the upside for that market. So we've got 20 minutes before the open, so the US Open. So we'll sorry, bear with me just 1 second. Okay, so let's have a look at a few of these other opportunities. So what we're looking to do is to trade the potential bullish upside in this market, as you can see on the daily time frame. So we're looking for continuation on this move with a view to obviously seeing if we can squeeze higher. So and our trade is actually below the daily low, as you can see, in terms of a stop loss placement. So it's a good strong technical stop loss below the monthly high, below today's daily low, and a momentum swing low. And now we're going to see if buyers are really interested in pushing prices higher. So hopefully we'll get a good move in that one. So looking across some of the other markets, we can see the equity market's not really doing an awful lot. Do it. Okay, so sorry, just bear with me a minute just before we do the rest of our analysis, because there's we'll have a look at see what the equities, the indices markets and the dollar is doing in just a moment. Okay, so let's see what other opportunities we have as we approach the US Open. And some of our trades from last night's webinar. Every evening at 9 o'clock we have a trade plan session, so we want to be well prepared for the opportunities as and when they arrive. Bit of a kind of a slower week really this week. It's a little bit more I suppose a little bit more erratic, very little directional movement perhaps in some of these markets. Although we do want to see what we can capitalize on. So we looked at the euro dollar. Sorry, that was from yesterday, wasn't it? So it was actually the pound dollar. So let me get the pound dollar up. So if you look at this market on the daily time frame, you can see we're in this fairly narrow range. Now let me amend these levels. So you want to see at what point does this market respect this level, and you can see we're in this little uptrend. So when you identify an uptrend, what you're looking for is opportunities in areas at which we see this market interact with this level, and if you stack the odds in your favor, what you're looking for is obviously buying opportunities off these levels. Now they're the pullback trades in an uptrend, and we're looking for the same here. So you see this bit of price action here. It just goes way outside the kind of the comfort zone where we start closing above that level. But what we have done is we've pulled back to this support level. So it's a clearly defined level of support, and we're looking for a buying opportunity. So that's the overall sort of analysis on this trade. So we can zoom in, and actually the level at which we were interested in getting into this trade was above the 139.20. Yeah, it was the 39.25 level, which is just above this high in here. So let's. So as you can see, we've opened up and we've failed to make that new high. Now, what's interesting about this market is if we roll further to the downside and we start seeing some dollar strength creep in again, which is what we do want to keep that trade very much at the forefront of our minds in terms of dollar strength. We've got the bond auction later on today, so if yields start increasing, the equity markets will roll over and the dollar will strengthen. That's what you can expect in advance of these moves happening, so we can be prepared for those opportunities. We're already in a few dollar related trades, so let's see if we get some consistent follow through. So we're in this, we're looking for, actually we planned for a potential buy trade. It obviously needs to fulfill certain criteria to the upside for us to get into it. Looking at the Aussie dollar, similar situation. We were looking for the buy trade. It would have to be above the 77. What was the level we were looking at? 77.26. As you can see, similar to the pound. Price action is not performing as per our expectations, so we can be patient. We don't need to be jumping in on sideways moving price action. Okay. Okay. Okay.
Some vaccine news here from the United States, this coming via Jeff Bennett, the NBC White House correspondent. It says President Biden today will announce that he is directing his team to purchase an additional 100 million doses of the Johnson & Johnson vaccine. Administration officials have told him he's expected to make the announcement during a meeting with executives from J&J and Merck.
Okay, that will be interesting. Okay, so we initially planned for some buying opportunities. These markets were pulling back to levels of support. As you can see with this level of support in here, we're expecting some continuation. That trade is not happening just yet. Now, there's the potential for these markets to actually continue to roll over. We are keeping a very close eye on what's going on with the S&P and the US indices markets, and that so far is not an awful lot, to be honest. We're currently in our buy trade for crude oil, so we expect this market to continue ticking to the upside. So there's your daily time frame. We're pulling back and now we're looking to bounce off this level of support. So that's the trade we're looking for. Okay, delete that one. So looking for a buy trade. Similar sort of analysis really for the New Zealand dollar. It was never going to be a case of getting into all of these trades, but we would have cherry picked these. If some dollar weakness starts creeping in across the board, we would have cherry picked either the pound dollar to the upside or the Aussie dollar. You're looking at your commodity currencies again with an uptick in commodity prices. They're kind of primed for potential buying opportunities. So obviously the opportunity is not revealing itself just yet, but it doesn't mean that the trade is off the table. So we want to keep the option open. We're looking to, so we're just a few minutes away from the open. Gold is just really sitting on the monthly low, as you can see. What I can do is I can get rid of a few of these just to make it a bit easier to see. These levels are kind of intraday. We leave that one in there. So you can see it's just hanging around the monthly low. So we can prepare for still the dollar weakness trade. And you see, sometimes markets can be in transition. So we can go from a dollar strength to, I suppose, a period of indecision into the dollar weakness trade, and we're just in that transition phase at the moment. Will the dollar strength trade evaporate, and will that dollar weakness trade begin to kick in? Well, all we're doing is preparing for potentially the dollar weakness trade to start to kick in. By no means are we kind of setting up. We're already in dollar strength trades, so we're actually looking to let those go and hopefully generate some profits on those trades. However, saying that, we don't want to take our eye off the transition phase, the potential dollar weakness trade, which has significant potential as well. So we'll just put in our levels just for you to keep an eye out for. So we're looking to buy the pound dollar above the 39.32, and this is all in keeping with our trade plan webinar, which we have every night at 9 o'clock for 30 minutes. We go through all these markets, we discuss our opportunities, we lay out our trade plan, and then we look to execute that when we get to our trading desks in the morning, if the opportunities present themselves. If they don't, we're happy to be patient and wait for what we call higher probability trades. We're waiting for those to set up. So let's put in this little label here, and we're only looking to buy above this level. We're not looking to get into it at this point because we don't have the clarity that we're looking for. The 139.25. 139.25. So it's a green. So that's what we're looking for with the pound dollar. Oops, excuse me. So we'll just stick this in here. So looking to buy above the 139.25, which is yesterday's high. So that's what we're looking to do for the pound dollar. Similar situation for the Aussie. We've got this pullback trading opportunity here. We've got the monthly low. Potentially we can look to get in above this 50 period moving average, basically. And that's the trigger to maybe capitalize on the next leg to the upside for these markets. So we can see that the 50 period moving average is a 77.36. So we'll just move that level up there, and it's actually above as well these 4 daily highs. So that's something to take note of. And if you look at this on a smaller term time frame, what you're seeing is consolidation over 4 trading days. And again, that's exactly what you want. You'll often see some consolidation at strong levels of support for prolonged periods, because same to the downside. Even if you get small moves to the downside, we can expect some sideways moving patterns before we get the next move, and we see that time and time again. So really above the 77 at 36 for a potential buy trade. So let's so we're looking for a buy trade now. Looking for buy trade above the 78.37 level. No, it's not. It's the 77.36. 77.36 level. So again, it's a buying opportunity. It's looking for that dollar strength trade. I'll just put it in there so you can take note of these trading opportunities. These are what we refer to as high probability trades, and we need obviously price action to just perform as per expectation. So with the New Zealand dollar, it's the 71.89. 71.89. So that's the New Zealand dollar. We can obviously go into these opportunities again in just a second. So we're looking for buy trade above the 71.89 level. Okay, we're already in. So we're getting a little bit of an uptick now again in crude oil. So we're already in that market. So hopefully it has the potential to be a really nice trade to the upside. You can see the 2-day bearish price action where we if I just take this level up here and we'll just see, so we're looking at the 67
Japan said to be seeking
87 level
yield fluctuations after their review. Try and get you some more colour on this. Just repeat, BOJ said to be seeking freer yield fluctuations after review.
Okay, so we're looking for extension to the upside, and we can see that stop loss will be below the 63.11. So we've got a nice technical stop loss.
Japan officials are looking at ways to enable yields to fluctuate more freely in their policy review. That's according to people familiar with the matter. Some of the officials want to find ways to generate more fluctuations while sticking with the current movement range of around 20 basis points either side of the zero target on the 10-year government bond.
Okay, we just get these market updates from our Squawk service. So that's what you're hearing in the background. So a very simple, straightforward. This market reversed, and we've seen this market come back to previous levels of resistance, which now become support, and we're just looking for that accelerated move to the upside. So hopefully this has every potential to be a real decent trade for us. Okay, let me get a couple of these little levels out of the way. So we're looking for that little buy trade to the upside for crude oil, and we do have crude oil inventories today, this afternoon, so we'll keep a close eye on that one. The S&P, it's not really doing anything just yet. We're not really seeing any significant move. I'm pretty sure that these equity markets are a bit nervous about the bond auction today at 6 p.m. The 10-year note. We had some problems last week with the 7-year note. What it caused is the very significant move last week to the downside, and that's what it caused. So if demand for these bonds are quite low and the yield increases, then we can expect further downside in these equity markets. So don't be surprised if you see further selling later on, especially early evening, because it very well may be down to the US Treasury bond auction. So do keep that in mind. We don't want to trade in a vacuum where we're not mindful of these major market moving events. We want to sort of align ourselves with the knowledge and understanding that these events are likely to influence price. And that's really all we care about. We're interested in what price is doing. We're interested in volume and direction. And you only get that once you get markets moving. And really, we want to have a baseline understanding in terms of why markets move the way that they move, and then try and position ourselves, of course, to try and take advantage of that. And that's what trading is for us. It's having a trade idea, it's developing that idea, it's giving space and time for those opportunities to develop and to reveal themselves, and then we look to execute, and then it's all about trade management then, in terms of removing risk when we can and letting those winners go. So sounds easier said than done, but that's obviously why we're quite happy to run these live webinars to kind of show you in real time how that works. So we can expect this further to the upside for the crude oil. So what we'll do is we'll just keep an eye out on the daily time frame for the S&P 500, and we'll get rid of some of these levels again. So we're firmly trading inside yesterday's highs and lows, and very little momentum of volatility in these trades. So there's no real trades at the moment.
On the state of play in Washington, this coming via Manu Raju. He's the congressional reporter for CNN. It says the final House vote to clear the $1.9 trillion COVID bill, expected between 11:45 and 12:15 p.m. Eastern. That does head to Biden's desk after.
Okay, so we might get some action on the $1.9 trillion US stimulus package, where Americans will receive $1,400 in the form of a check, which they hope those individuals will spend in the economy accordingly. It's a policy that's based on stimulus to try and stimulate growth, as opposed to the previous crisis that we had with the credit crunch, which revolved around austerity on a global basis. This is very much built around stimulus. So that's the nature of, I suppose, the environment in which we're operating now, in the stimulus driven, low rate, low inflation environment. Unfortunately, currently with high unemployment, with a number of sectors really underwater as far as COVID is concerned, and these restrictions like your services and your hospitality industries as well, and airlines and travel, have all taken a very significant hit. But the hope is with these stimulus packages that we're likely to get an uptick in demand, that there's this pent-up demand. And now, certainly as far as the US is concerned, there will be a high degree of incentive really for those with cash to go out and spend it, and that's what effectively keeps the wheels moving. Now it's likely to provide some fascinating trading opportunities.
We are about to reset our broadcasters, meaning the player will show a fair for the next 30 seconds or so. Should refresh on its own, but if you don't hear from us, please refresh the player at your end.
Okay, so and that's the key. Is this environment likely to create some fantastic opportunities for us? The answer, without a shadow of a doubt, is yes. So whether equity markets push higher, whether they push lower, there's bound to be some fantastic trading opportunities for us to capitalize on. What we have to do is just position ourselves and look to take advantage of those moves, really. The whole inflation trade is a very, very interesting one. You would have to think, with the amount of stimulus that's in the system, that prices will increase. As a result, we'll see an uptick in inflation. We've got just to remind you guys, we've got CPI data due out shortly. So we will see how that plays out, perhaps for 5 or 10 minutes, and then we'll have to let you go. So we do have other sessions with traders on after this live event. So we'll need to log off at probably about 1:40, I'd say, at the latest. So so we'll see these CPI data. We'll have a look at these. We'll see the impact that this news event will maybe even perhaps trade the event if we get a high probability trade, depending on the we don't generally trade news.
We're just over 15 minutes away from the bottom of the hour and the release of US CPI data.
Okay, good. So we'll get some live market updates in a minute, and it's a bit of excitement for the week because there's not really a huge amount today and obviously tomorrow. We got the ECB, so expect a lot of volatility around this time tomorrow as well, so I hope you can join us for that. But those of you that are interested in trading, and if you do want to have a look at what we offer traders, we do set very, very low fees and charges. So you can go to a website. We've got a whole range of products and services. We have our live trade plan webinar every evening at 9 o'clock for about 30 minutes. And we issue our trade plan for the following day. So you can have a means in which to identify and focus on the right type of markets and we discuss the direction in which we're looking to trade them, and the prices at which we look to get into those trades. So it'll really help you plan and prepare for the market moves before they happen. It's no use talking about them retrospectively. It is really about preparing yourself and getting into those trades, at the point in which they become trading opportunities, and try to avoid missing the opportunities. And so we'll trade this news event, CPI. We're talking about inflation, or the impact on inflation. So it's the change in the price of goods and services purchased by consumers. If there's a significant uptick in that, that's a big problem and a big concern for central banks and the Fed. Because one mechanism that central banks can use to offset the overheating and the uptick in prices is interest rates. But the problem with that is it'll increase debt burden as well. So we'll have, if interest rates go up, people are paying higher installments to repay that debt, and that can become a burdensome situation very, very quickly. And for some, it could be the tipping point. So we'll have to see how we get on. But we do have these CPI, and we're looking for strong deviations actually off the print. So 0.4, 0.2. We're looking to see whether it's in line with expectation, which is really, it is largely what we would expect with these monthly figures, relatively close to forecast. But we're getting some random news releases, like the crude oil inventories last week. We were expecting negative 1.3 million barrel, and we saw a positive 21.6. So we haven't seen that since the early 80s. So really unprecedented moves, and not really that, a little bit counterintuitive actually. Was the price action that we experienced off the back of that. So a negative figure would imply support for crude oil prices. A massive positive figure like 21.6, you could expect crude oil prices to actually tick lower, and we saw the opposite. We saw quite an explosive move higher over the since last week. We've seen prices really tick up to the upside, from roughly around the $60 level to the $68 level. So when you're talking about increases like that, you're talking about 10 to 12% uptick in a very, very short period of time in a market that has this type of volume. So
German Chancellor Merkel speaking here says we face 3 or 4 more months, or difficult months, in the pandemic.
Yeah, there's no doubt about that. As these economies start to unwind, it's going to be probably a bit slow and a bit arduous, but you would certainly expect that and it's the problem with Europe is the rollout of the vaccine is very poor. So there's surpluses being built up in some economies like Germany and France, and there is deficits in many other countries. So they can't roll out the vaccine as quickly as they would like. So they have more capacity, but they don't have the actual vaccines. They're sitting in probably warehouses in Germany and France. So there's this. It's not inequality because there was an arrangement and they all signed up to it to allocate vaccines on a pro rata basis. So when the vaccines are ready to go, they get shipped out depending on the size of the population size of each individual country. So on the surface it's fair, but what we're finding now is that we have certain economies like the Irish who are in desperate need of more stock.
We're just under 10 minutes away from the bottom of the hour and the release of US consumer price data for February. Headline CPI month on month is seen rising by spot 4%, the range spot 3 to spot 5% against a prior spot 3, and CPI year on year seen rising by 1 spot 7%, the range 1 spot 4 up to 1 spot 8%, that's against a prior 1 spot 4. Moving on to the core print, month on month seen rising spot 2%, the range is flat up to spot 3% against a prior flat read, and core CPI year on year seen rising by 1 spot 4%, the range 1 spot 2 up to 1 spot 6% against a prior 1 spot 4. We do get earnings data as well. Real weekly earnings month on month seen rising by spot 1% against a prior spot 8, and real weekly earnings year on year noticed over the prior of 5 spot 7%.
So we've got the CPI data out in just a moment. So we're talking about the vaccine rollout. So there's more capacity in Ireland, for example, to actually put more vaccines into people's arms, but there's a supply issue. They're not receiving the supplies that was agreed, apparently, to a certain degree. Whereas you've got a situation in Germany and in France where there was a stockpile of 6 million vaccines last week that weren't used. So I'm sure you could find a system where they could distribute maybe half of that across countries that are looking for increased supply, without it having a massive negative impact. I suppose countries are so concerned that if they get rid of the supply that they have, they might not be able to get additional supplies further down the line with
Going back to the US CPI data, quick preview here from TD Securities. They're in line with the market's consensus, looking for spot 4% month on month, saying the CPI is probably led by a surge in energy prices. They say the rise in the more trend-setting core part was likely much more modest though, with the rise held down by the declines in used vehicle and airfares and minimal gains once again in rent components. They do say they continue to view COVID as disinflationary on balance. However, the base effects will result in strengthening on a year-on-year basis in the next few months.
Okay, so look, we'll prepare for the CPI news event now out in just a moment. I hope you don't mind, but I'd like to take just a very, very quick break just for 1 minute, and I'll be back to you in just a second. So bear with me if you can, and I should be just 2 minutes flat. I'll be back to you shortly. Bye for now.
Being reported again by Reuters here, the UK is summoning a senior representative of the European Union. Had earlier summoned the ambassador, but the UK is yet to recognise an EU ambassador. So now reports the UK summoning a senior representative of the European Union.
Okay, thank you for that. Right then, let's get ready for this news event. So we'll it's consumer price index. So we're talking about, you know, the inflation, the real impact on commodity prices for consumers. So we'll focus in on the euro dollar. It's often probably one of the better markets to focus on to see how the dollar does react to this news event. So you can see the S&P just quickly. You can see the S&P just not really doing anything. We're already in a buy trade for crude oil. We expect this market to tick higher. Nothing really getting close as far as the dollar weakness trade is concerned. So we're very much contained at these current prices. So what we can do is we can just spend a little bit of time now on the dollar and the news event. For this, we can probably look at just look at it on the daily time frame first. So again, we can get rid of a few of these.
We're just under 3 minutes away now from US CPI data for February. Month on month seen a spot 4% year on year at 1 spot 7%. For the core print, month on month seen rising spot 2% year on year, 1 spot 4%. And US real weekly earnings month on month for Feb seen rising by spot 1%.
So very quickly, we're below the monthly low. We've had a nice, strong move to the downside. Yesterday we saw a really strong reversal, and now we're seeing sort of mild bearish price action. So really, I mean, we're still in this to the downside. We've mitigated risk on the trade, so there's no exposure to us on the trade, but we do anticipate further downside. So that's our bias in this particular trade.
The White House now confirming earlier reports US President Biden is to announce that he's directing his team to procure an additional 100 million doses of the Johnson & Johnson COVID vaccine.
So what I'm going to do is I'm just going to break up the screen. So we'll put our chart on the outside, and what we're just drawing attention to is the volatility or the reaction of the dollar. This is on the daily time frame, so we'll have a look at it. In fact, let's see the volatility in real time. So we'll have a look at it on the minute time frame. We wouldn't be trading this time frame at all, but sorry, let me just get this set up properly. So
One minute till data. We'll be leading with US CPI month on month for February, seen rising spot 4%.
So let's look at this. So we've got this little bearish aspect to this trade. So let's continue to look at this then. and we'll just monitor what's going on in and around this price. So we're very much range bound between 1890 and 1880. So let's see what happens to this price action. And let's now just get this ready as well.
10 seconds. Spot 4 on the month and 1 spot 7 on the year for headline, and spot 1 on the month, 1 spot 3% on the year for core.
Okay.
US real weekly earnings minus 1% month on month for Feb. Just to repeat, US headline CPI month on month in line at spot 4%.
0.4.
Year on year also in line at 1 spot 7%. Slightly softer outruns for the core print month on month spot 1 versus spot 2% expected.
Okay.
And
So
year
slight
on year
deviation.
1 spot 3 versus 1 spot 4%
So-
expected. US real weekly earnings month on month minus 1% was seen rising spot 1%. The prior revised down as well, spot 4 from spot 8%.
So on a 15-minute time frame, so we just saw 1 basis point lower than anticipated. So with all the furore around increasing inflation, when we look at certain core CPI, for example, it's in line with expectations. We're not seeing a sizable uptick, and in fact we've seen
US real average weekly earnings year on year rise by 4 spot 1%. Real average hourly earnings rise by 3 spot 4% year on year in Feb.
So what's interesting is the CPI rate is about 1.7 for the year. The Fed's target is about 2%. So we're a little bit lower than
UK Foreign Minister says possible changes to the Hong Kong election progress would be a further attack on Hong Kong's rights and freedoms.
So look, all we can really see is the price action move from sort of 1885 up to 1898. So we've only seen a sort of a 10-15 pip move. So by no means is that hugely explosive. We're seeing a really nice uptick in our crude oil trade to the upside. So we know the CI figures now, so wouldn't be too surprised really to see the dollar just soften a little bit. See how this fits in with our Aussie dollar potential buy trade. The New Zealand dollar is getting close now, and I'm sure the pound dollar is getting, well, it's not getting that close, but we're not too far, probably 30 pips away from a potential buy trade in the pound dollar. Maybe the move now is in the Aussie dollar. So we've got a bit of a green light really for, and you can see there's a bit of an uptick. We've got a bit of a green light for some indices strength and some dollar weakness. So and we're getting a nice little move in our crude oil trade to the upside. So we're getting that this market ticking higher, so that's good. Fingers crossed on that one. So hopefully a much bigger move. And you see, when we get into trades, we never know which one's going to be our big winner. So we want to focus on I suppose the our execution and focus on the opportunity and planning for those trades. And we'll let the big winners take care of themselves, but we'll make sure we won't take any big losses, and we'll make sure that we'll quite often what we find is our small winners offset our small losers, so that it all in all it levels itself out. We don't take big losses, so all that's left with is big winners in terms of our account an uptick in our trading account, and that's really I suppose the approach that we adopt. Gold looks like it's ticking upwards, so it looks like we're getting this dollar weakness trade begin to kick in. Let's see if it has the mentality or the market conditions really to really push higher with a high degree of conviction, or if it's just kind of a flouting trade. So we're seeing gold tick higher, so there is capital coming out of the. We can see the euro pushing, euro dollar pushing higher. So really, we can look to position ourselves for that dollar strength trade. The pound is a bit slow on the uptake here, so we're 20 pips away. We're probably 10 pips away for the Aussie dollar, and we're not too far away at all, probably less than 10 pips with the New Zealand dollar. So we'd probably prefer the Aussie dollar above the 77.36 rather than the New Zealand dollar to the upside, just purely because we have the 50-period moving average above it, whereas we'd be breaking above that level with the Aussie dollar. So we can still, even within trading opportunities, we can still discount certain opportunities at certain times and things like that. So it's all in your sort of toolkit for profitable trading. And trying to instill confidence in you to make those decisions to obviously grow your own capital. So look, these are our trades. Unfortunately, we do need to end this broadcast now.
Comments from the UK Foreign Office Minister commenting that he strongly supported the work of the UK Ambassador in Beijing.
There's an opportunity to buy gold now. We're now above previous daily high and above the monthly low, so we'd expect a little bit more uptick in gold as well. And really, will we get follow through on that dollar trade? We'll have to wait and see. We're getting a nice move to the upside on our crude oil trade, and the S&P 500 is threatening to push higher, but we're not really seeing that follow through just yet. So hopefully there'll be a few opportunities this afternoon. Just be mindful of the 10-year auction, US Treasury auction at 6 p.m. this evening. If you get into trades, that's fine. Try and mitigate risk prior to that news event. Don't expose capital thinking that the trade will fly to the moon. It very well may turn around very, very quickly. It's probably the reason why the S&P is not reacting. We're not seeing a little bit more bullish price action in the S&P. It's probably now shifting its attentions to, okay, so what they can do is they can tick off. Inflation is not meaningful enough just yet. It's likely to be in the pipeline, but it's not filtering through just yet as far as CPI is concerned. So that's good news for the equity markets, but they're focusing on demand really for the bond auction today, and if that increases the yield for bonds, then expect some downward pressure as far as the equities are concerned. And that's maybe why prices are just being held up. Otherwise, we would expect, like a 30, 40, 50 point move in this market already, and we haven't seen that just yet. And we're not really seeing the major follow through to the upside as far as the dollar's concerned, the dollar weakness trade is concerned. So maybe all of these things are we might see limited volatility this afternoon. and hopefully we'll get further upside in our crude oil trade to the upside. So fingers crossed we get a good move in that. Okay, so look, thank you very much for joining us as always. For more information about some of the products and services we offer traders, do go to our website. They're up on screen, thelivetraderoom.com, and there's a chat function. So if you've got any questions, we'll be happy to answer them there. And hopefully we can help you become a consistently profitable trader at very, very low prices without the need for additional accounts. We have our no conflict policy. So with us, we don't have conflicting arrangements with third parties. That's important for us. So I suppose you can rest assured that we don't have ulterior motives when it comes to directing you to certain areas or to giving you advice, or not giving you advice, but being able to kind of broadcast how we trade financial markets, and of course discuss some of the important themes that you would need to take in terms of risk management and things like that. So look, we can help you over at the live trade room, so go and have a look at that. Give us a thumbs up if you can on the video, and subscribe to our channel. We'll be broadcasting lots of content now over the coming weeks, so you'll be very welcome to access that as well. And we'll be live again tomorrow at 12 noon. So from everyone here at the live trade room, thanks so much. Do take care, and we shall see you soon. Bye for now.